السلام عليكم. لا تنسوا الإعجاب والاشتراك في القناة تشجيعا لنا لمزيد من العطاء والتألق.
That fair value gaps tell you everything you need to know in the market. So that also means that fair value gaps tell you which fair value gaps will be traded back into, right? Exactly. So let's dive straight into it. First step, understanding the 3-candle pattern, but paying extra attention to details, because we are going to pay extra attention to the 3rd candle of that 3-candle pattern. Right here, I have marked out all the recent fair value gaps on Nasdaq. What you're seeing here and the gray boxes you are seeing right there are all the recent weekly fair value gaps on Nasdaq. Starting with this one, and that one right there, that one, that one, that one, and that one. Now, can you notice a certain difference right here, where they all have the 3-candle pattern, meaning they all create a fair value gap? With the first one right there, creates a fair value gap with 1, 2, 3. The second fair value gap, 1, 2, 3 right there. Can you already notice a difference between that first fair value gap and that second fair value gap? With paying attention to the 3rd candle. So if we dissect a fair value gap being created, again, it's a 3-candle pattern. With the first candle, can do whatever it wants. Can be consolidation, expansion, whatever it wants to be. The second candle is, of course, always an expansion phase. What we're seeing on that first fair value gap right there. It's always an expansion phase, because that creates the overall body of the fair value gap, the actual fair value gap. Then the 3rd candle can either consolidate, be an up candle, be a down candle, and depending on what that 3rd candle is how we already will know if it is a breakaway gap. A breakaway gap is a fair value gap, but within fair value gaps, you also have different kinds of gaps, where a breakaway gap is a fair value gap, but a breakaway gap is understanding that the gap will not be traded back into before we reach a certain draw on liquidity. So in the short term, in the next few candles, next 2-3 candles, we will not trade back into a breakaway gap. So if we understand the 3rd candle of a fair value gap, then we can understand and have a great idea already if that fair value gap is actually a breakaway gap. And if we look at this screen right now, then we see the red fair value gaps and we have green fair value gaps. All the red fair value gaps are breakaway gaps, and the green fair value gaps are just your normal fair value gaps that we can expect a retracement into in the short term as well. Why is that? Because if we again look at that first fair value gap, what do we see? We have again 1, 2, 3. This last candle, the 3rd candle right there, that can be a consolidation, expansion, whatever it wants to do. But if it wants to expand higher, meaning as a general rule of thumb, if it wants to close above the previous candle high, meaning previous candle high of the 2nd candle, that is the expansion phase. If it wants to close above that right there, then that as a general rule of thumb means that we are not going to trade back into the fair value gap right there before we continue higher. So here we can see, yes, eventually we trade back into it, but in the short term, we do not trade back into it. Then that is already the first indication, but not the only one, that is a breakaway gap. Then the second fair value gap, the green one right there. This is the previous week high, as in that is the previous high of that candle. Again, this is fractal. It's not only on the weekly. Do we close above it? No. A great indication that once we leave behind that fair value gap, we actually want to trade into it to then continue higher. In the 3rd fair value gap, what do we see? Do we close above that previous candle high, the 2nd candle right there? No. So we trade back into it. That 3rd fair value gap, also a green fair value gap, because what do we see? On the previous candle low. Do we close below it right there? No. So the next candle in the short term can trade back into the fair value gap that was created. Then after that, what do we see on this candle right there? Again, 1, 2, 3. We see that we are closing above the previous candle's high. And that is the same for the next candle right there, which both these fair value gaps right there are what? Breakaway gaps, where this right there, the next green fair value gap, is not. Why not? Because again, same exact thought process right there. So that is only the first step. And if we understand that first step, that's already an incredible step. We already know more than 99% of the traders on which fair value gap will actually be traded back into. But this is all fun and games, but how do we now actually capitalize on this? The knowledge is fun, but we want to make money here. So what do we do in this situation? So I want us to pay attention to this green fair value gap right there. I'm going to remove it, going into the replay mode to show you exactly the thought process. Right here, we are moving higher. We are moving towards a draw on liquidity. So understanding the draw on liquidity right here is, again, the closest premium array right there. We've been moving higher, draw on liquidity, the closest premium array. Now, why is this breakaway gap quite important to understand? Because on the next candle, the next weekly candle that opens, we now have a weekly fair value gap sitting right there. So now we need to take into account, all right, if we want to reach this draw on liquidity right there, do we first come back into this weekly fair value gap, or do we already deliver higher towards a draw on liquidity first? So what will be traded back into first? The discount array right there in the form of that weekly fair value gap, or the draw on liquidity in the form of that premium array, that swing high sitting right there. Well, based on our understanding already, we knew that if this right here closes above the previous week high, the previous candle high, that third candle closes above the second candle, which is the expansion phase. We understand already that this now has a high probability of being a breakaway gap, meaning that we are likely going to trade into this draw on liquidity first before we actually reach for that breakaway gap. Meaning that on the weekly time frame, we currently do not have a clear discount array to trade off of. So what do? We are now going down one time frame. So if you have a breakaway gap, you go down a time frame to look for a new fair value gap to trade off of. So if we go down into the daily time frame, then on the daily time frame, we are now seeing that we have the draw on liquidity right there, and we also have this daily fair value gap sitting right there. So that daily fair value gap is now the fair value gap we want to trade off of. So here we are now first targeting this context high, because again, understanding that market maker model, we are forming a market maker buy model here, moving from a discount array to that premium array. This is the area right there where we want to get involved. And then afterwards, we need that new context again. So this daily fair value gap will again be responsible currently to push price higher. So why is that important? Because now we are not left waiting for that weekly fair value gap to hopefully be touched sometime. No, we are already getting involved right there, where it's the same exact premise. Can you see where this candle closed right there? Did it close above that previous candle's high? No. So what will it do? Trade into the fair value gap sitting right there. That is the highest probability thing to happen. So now what do? We go into the 4 hour as well to see, all right, how can we now look to potentially capitalize on this idea that we have? If we skip price a few ticks right there, then eventually we are seeing this. Very interesting. We are now creating this 4 hour fair value gap right there. That 4 hour fair value gap, let's take it into account. What is happening? Well, we have that third candle. The third candle is closing above the previous candle high sitting right there. What is this price action likely going to reach for first? The fair value gap right there that we might trade higher off of, or this draw on liquidity right there? Well, based on this knowledge, the simple knowledge that we currently have on breakaway gaps, which we are going to add on to as well. This is only the first part. We understand that right now, there's a higher probability of coming into the draw liquidity first before even coming into the 4-hour fair value gap right there. So let's not get left waiting, because on the 4-hour, we simply do not have any discount array, do not have a 4-hour fair value gap to trade off of right now. So what do? We allow ourselves to go down a time frame right now to see, do we have a discount array? Do we have a fair value gap here to trade off of? No, not yet. Why not? Because we are not creating that fair value gap just yet, just after the next candle. So what can we do again? We can go down another time frame right there to find that fair value gap. So here on the 15-minute time frame right there, do we now have a 15-minute fair value gap? Yes. So if we want to trade into any fair value gap, then it will be the 15-minute fair value gap sitting right there. So if we skip price a few ticks right there, that is exactly what we are seeing. Which, if we waited endlessly for the 4-hour fair value gap right there, or even the 1 hour, then we would simply not have that sting into it before we reach the draw liquidity sitting right there. That is extremely important to know to, of course, capitalize on the move, also not get left behind, understanding which fair value gaps we want to trade into, because we can trade off of them, but we can also trade towards them. Because here we are on the daily time frame again, and we are seeing we're pushing higher nicely off that daily value gap. We've reached the first target right there. So right now we want to wait again. Let's wait a little bit, because we also understand right now that what is happening. Whilst this new week is forming right there, we also see that of course there's a new weekly fair value gap forming, which that right there is the previous candle high, which will create a new fair value gap in the form of this fair value gap sitting right there. So here on the daily time frame, we want to now wait a little bit, because we know there's currently a weekly fair value gap in the making as well. And what do we see on the daily time frame? We now see something very interesting, because we also see that we are now failing to create a new fair value gap higher of that previous fair value gap, which is already a concept we've gone over a lot of times, because that indicates that there's a lack of intention currently, which is in perfect alignment right now with understanding that breakaway gap as well. Because here we are not closing above that previous candle high on a weekly basis right there, which means that the next few candles we can look to trade into the weekly fair value gap, and we can also look again to trade off of that weekly fair value gap. By understanding again that here on the weekly time frame we have what? We don't have that close above that previous candle high right there, which indicates that this is not a breakaway gap, which indicates that there's a high probability we will likely trade into this fair value gap first before we actually move to the draw liquidity. And that weekly fair value gap is again where we can trade into it, and we can also look to trade off of it. Trading off of it right there is the highest probability thing to do. Which, if we now look to trade off it, then again, the first target is this high, and then of course after that it's this draw on liquidity sitting right there. So if we understand that and we go into the 4-hour time frame, then on the 4-hour time frame we are continuing higher nicely overall right there. Eventually right there, NFP also happens, and we haven't even incorporated time just yet, where NFP right there stings into that 4-hour fair value gap sitting right there and eventually continues higher, targeting of course the first target sitting right there, where at this moment in time we create again that new 4-hour fair value gap, also continue higher off of that. Then right there on that day, on that Monday, what do we have? We have on the 1 hour a 1-hour fair value gap in the making currently, and right there we could argue that we have this candle, we see clearly that this candle right there is closing above that next candle's high. All right, so likely we will reach the draw on liquidity first before we actually retrade into the 1-hour fair value gap. So let's dive into a time frame below the 1 hour right there, which on the 15-minute we see we have this 15-minute fair value gap sitting right there. Now, this situation, what you would do here is you would still use the 15-minute fair value gap just to keep it objective right there, because we have that context sitting there. So we can't take that away. But if we look at this 15-minute fair value gap, what do we also see? We do see right there that on the 1 hour, the 1 hour fair value gap is even a little bit higher than the 15-minute fair value gap. So what do you do in a very rare situation like this? You just simply wait. You wait. If we get that retracement into the 1 hour fair value gap, perfectly fine. We're still happy to get involved because we still had that 15-minute fair value gap as well sitting inside that 1 hour fair value gap. So the rule overall is still valid. But we understand that it might not want to trade into that 1 hour fair value gap. So what do? We just wait. If it trades into it, we are still bullish. We take a trade off it. If not, and we reach that draw liquidity right there, perfect. We also know why. And we don't want to trade off that 1 hour fair value gap anymore. Because again, we are looking at short-term returns into fair value gaps. Not after a few candles. No. What are the next candles likely going to do right there? And in the next candles, we do see that we are coming into that 1 hour fair value gap right there to then continue higher towards the draw liquidity overall. This was the first understanding. As in, this is the basic knowledge of a breakaway gap that you have just learned. What is the next knowledge of a breakaway gap? Because after we take that draw liquidity, both those draw liquidities actually, then what do? Which fair value gaps do we use right now? Because we have quite a fair value gaps to choose from right here. So what do we actually do right now? This is where the float concept now comes in, plus the fair value concept. Again, a quick story on fair value. What actually is fair value? The market is always offering fair value. In other words, rebalancing something. Those are the same things, fair value and rebalancing. Or the market is seeking liquidity. So if we understand that, then what actually is fair value? Fair value is, like it already says in the name, it's offering fair value. Meaning that both buyers and sellers should get a fair chance to get involved in the market. So when there's only buyers in the market, there should also be a fair chance for sellers to get involved. If they want to get involved, then let's offer them a fair chance to actually get involved. Which is why a bullish fair value gap right there is usually what? It's only buyers in the market. Which is why it's called a fair value gap in the first place. Because there's a lack of fair value there. So we need some sellers inside that bullish fair value gap to actually offer the fair value to then continue higher. So with that logic, we could argue that every fair value gap should be traded back into, right? And that was also my first understanding of a fair value gap until I dove deeper into it. Because if we zoom out a little bit and we make use of overall structure, market structure of the market, then what do we actually see? Well, if we zoom out, then here we have this buy side offering. So here we've been going higher. So overall, we can argue there has been buy side offered right there. After we make this retracement into the weekly fair value gap to offer some fair value. And after that, we move higher again. So in those recent swings, 1, 2, 3 right there, that creates what? Creates a mitigation block. But not only that, that also creates a fair value area. Because if we want to continue higher right now, then where is the only place that we have not offered fair value just yet? Everything above this high right there. Because everything above that high, what happened? Let's zoom in a little bit. Everything above that high, we only had buy side. Where below that high, so this area again, is where we had what? We had buy side in the form of this move higher right there. We had sell side in the form of that move lower. Buyers and sellers both got a fair chance to get involved. After that, we move higher above that high, which is what we call a market structure, an intermediate term high, which creates the area above that high again, above the intermediate term high, which is the only area that we have not offered fair value in the short term right there. I hope I can hear some clicking sounds in your mind, because which also means, of course, that if everything above that high is not offered fair value just yet, then the only place that we can return to continue higher is what? It's the high right there with the overlapping fair value gap. That is the area that price is going to want to respect right there to then continue higher off of that, which we are consistently seeing. Look at these highs overlapping with the fair value gaps. Look at these highs overlapping with the fair value gaps. Look at these lows right there overlapping with the fair value gaps, because those areas are where fair value is, meaning we should respect those areas. Respecting, again, meaning that we are wicking those areas, but we are not closing below it, and we are not creating bearish fair value gaps lower. If we do that, and we do create those bearish fair value gaps lower, for example, in this instance right there, where we also have those lows, but we create bullish fair value gaps higher right there, then that means that we will target opposing liquidity. Why is that? Because the market is either doing one of two things, offering fair value or seeking liquidity. So if it's not offering that fair value, which that right there is fair value, then it should move higher, right? If it's not doing that and it wants to continue lower and we have bearish fair value gaps, then it's doing what? It's seeking liquidity. So this fair value gap right there is the exact fair value gap that you want to trade off of, which also means that this fair value gap right there, the lower fair value gaps, even that lower fair value gap right there, are all irrelevant. The fair value gap that's overlapping with the high, that's the relevant fair value gap. But why then on this high right there, we had to sting into that lower fair value gap? Because that is where now time comes in, where we have three factors. We looked at that previous candle high, previous candle low, that close. What is that third candle right there doing? Is it closing above a previous candle high, etc.? That indicates the first step to understanding that breakaway gap. Then the next scenario is understanding the fair value. And then the next understanding, which we can go over in a next video. So if you want that, then please leave down a comment and tell me if you would like that. The next step and the validating factor is understanding time. And after we continue higher right there, of course, what are we doing? Well, we're also creating now what? Daily fair value gaps higher right there. Do we want to trade into those daily fair value gaps? Well, if we zoom out a little bit more, then what do we see? We see the same thing happening right here with the fair value offering right there. So if we want to continue higher, we will want to respect these highs right there with overlapping fair value gaps to then continue higher off of that. Which means that overall, if we have very low fair value gaps sitting in these legs, they are currently not relevant. Because if we want to continue higher towards this higher draw on liquidity in the form of that fair value gap first, and then afterwards even the highs, then we will want to respect the fair value gaps that are overlapping with the highs. Which means that everything below that becomes what? A breakaway gap. And we confirm that with that extra layer. And to sum it up right there, what have we just done? We now understand on the short term, so in the next few candles, if price wants to trade into a fair value gap right there. And we also understand in the longer term where price wants to trade into fair value gaps. Does it want to trade into the lower fair value gaps, into the previous breakaway gaps? Or does it want to respect the fair value gaps that are at the fair value area right there? So both on the short term and the long term, we now understand which fair value gap actually wants to be traded back into. And now imagine.
السلام عليكم. لا تنسوا الإعجاب والاشتراك في القناة تشجيعا لنا لمزيد من العطاء والتألق.